Welcome to The Explainer. Today, we're jumping into a deal that got everyone talking, the absolutely massive $55 billion buyout of the gaming giant, Electronic Arts.
So let's just start with a number that made everybody's jaw drop, $55 billion. I mean, just look at it. It's a figure that's almost hard to wrap your head around. So how did a video game company get a price tag this big?
And to be clear, this isn't just another big acquisition. No, this is the largest leveraged buyout in history, ever. We're literally watching a record get smashed, and it's all happening in the world of video games.
So you gotta ask, right? What on earth makes a video game company worth more than the entire economy of some countries? Well, the answer isn't just about the games they're selling today. It's about the timeless assets they're gonna control for a long time.
And that right there brings us to the very heart of EA's value. It all really boils down to one incredibly powerful three-letter word: IP, or intellectual property. This is the bedrock of their entire empire.
And we're not just talking about one or two hits. We are talking about a whole library of absolute powerhouse franchises. You've got the blockbuster Battlefield series on one side, and then this entire sports dynasty on the other: FIFA, Madden, NHL. Think about it. These aren't just games you buy once. They are annual events that bring in steady, predictable money year in and year out.
And this really shows you the fundamental split in the gaming industry today. You've got the free-to-play model, like Fortnite, that needs a gigantic number of players buying little things in the game. And then you have EA's model, selling premium, full-price games that are tied to that killer IP. It might seem a little old school, but man, has it proven to be incredibly resilient and profitable. It's like a shield against all the chaos in the market.
Okay, so if EA is so valuable and so stable, why sell? Well, the reason behind this deal isn't just about cashing out. It's about unlocking what the company could become by getting out of the public spotlight.
It feels kind of backward, doesn't it? If your company is this successful, why would you ever want to take it off the stock market and go private? What's the big advantage of hiding from the public eye?
Well, the answer is summed up perfectly right here. It's about escaping the storm. And that storm? It's the nonstop pressure of quarterly earnings reports and all the heat that comes from Wall Street. See, once you're free from that pressure cooker, the company can finally focus on the long game. They can take chances, invest in creative, maybe even risky projects that might not pay off for years, all without having to explain every single penny to shareholders every 3 months. It's like a strategic retreat so they can plan for a much bigger attack later on.
But a deal this big needs some serious financial muscle. So who are the power players behind this whole thing? Well, it turns out to be this really fascinating mix of global money.
Let's break down the team. First up, you have the tech nerds from Silver Lake Management, a private equity firm that totally lives and breathes these kinds of deals. Then, you've got the incredibly deep pockets of Saudi Arabia's Public Investment Fund, which has been throwing huge money at the gaming world. And finally, adding this whole other layer of political and financial connections, you've got Jared Kushner's firm, Affinity Partners. It's this powerful cocktail of tech smarts, unbelievable wealth, and strategic connections.
And the offer they put on the table? It's a knockout. $210 a share. That is a massive premium over what the stock was trading at. An offer that was basically designed to be too good for anyone to say no to.
But let's talk about the money. How in the world do you actually scrape together $55 billion? I mean, this isn't just lying around. It takes a truly massive financial operation.
This brings us right back to that term, leveraged buyout, or LBO. And honestly, the best way to think about it is, it's kind of like getting a giant mortgage to buy a house. The buyers aren't just showing up with $55 billion in cash. Nope. They are borrowing a huge chunk of it, and they're using EA itself, its assets, its IP, all that cash it makes as the collateral for the loan. And we are talking about an enormous amount of debt here, with JP Morgan leading the whole parade. Now, what's really interesting is the mood in the market right now. Investors are practically falling over themselves to fund this kind of debt. Why? Well, they're desperate to find better returns or yield than they can get anywhere else, and a big, stable, cash-producing company like EA looks like a golden opportunity.
So when you really step back and look at the big picture, you realize this isn't just a gaming story. This whole deal is a huge sign of a much bigger trend. We've got a global market that is just swimming in cash, and all these investors are hunting for the same thing, a decent return on their money. And that giant wall of cash is now pointing straight at big, reliable tech companies like EA.
And all of this leaves us with one final, fascinating question to think about. EA says it wants to escape the public markets so it can be more creative. But to do that, it's taking on a mountain of debt and a whole new set of very powerful owners. So, will this great escape really lead to a creative victory? Or will it just trade one kind of pressure for another? I guess only time will tell.